British pound still under pressure, but I wouldn't be selling it right here, right now, when the market is trading at 127.08. Join me for over the next couple of minutes or so, and I'll share with you what I think is going to happen with the British pound versus the dollar over the next couple of days. All right, guys, this is the GBP versus the USD. And we had that very sharp drop. The first part, which is the dollar gaining. The second leg here was because of the new internal market bill that the UK government is pushing, and it's upsetting people within their own ranks, but more importantly, the EU, which they're still negotiating with, because by the end of the year, they need to hopefully have some sort of a deal for the future. So trading between the two partners doesn't come to a complete halt. But that doesn't look to be resolved anytime soon, unfortunately. It looks like it's going to be more pressure, and nobody really wants to back down right now. Typically, political negotiations are like this, and then they get something done at the very, very last minute. Now, my latest view that I shared with you guys was to sell up here with stops just above. Now, that worked out great, right? We declined with some from the very high to the very low. The market declined with some 300 pip. Now we reached support levels. This is the July 21st high, and this is the August 10th high, and then you have the July 17th low. And in general, down here, we have quite a lot of support. It doesn't mean though that this can't come lower. Like, I just produced a video that's going to be on YouTube, and I talk about the Euro USD coming down. So I think that can go down further, and that can definitely weaken the British pound. And if we do take out something like 126.58, we'll probably go down to 112.25. But from a risk-reward ratio perspective, it's not the ideal situation to short here right now. Why? Well, let me explain. If you sell right now, right here, and you think the market is going to go down to the next level, well, you might be making 181 pips. But where are you going to put your stop loss? Yes, you could put the stop loss just above the high. That gives you a decent risk-reward ratio, 1.69. You might even put a little bit higher and you get a 1-to-1. However, realistically, we need to have our stop loss slightly higher. That means that we need to work with a stop loss up here at 130.20. And that means that you're risking about 300 pip to make 181. And that gives you an inferior risk-reward ratio. And that's why I wouldn't be selling there. Instead, I would assume that we can go up to maybe 129, and then from 129, if we just revisit the low, you'd be looking to risk about 100 pip to make 241, and that gives you a reward ratio about 2 times the money, and that I find far more interesting. Okay, guys, this is our market update. Don't forget to subscribe to our YouTube channel as well. In the first comment of this video, you're going to find a link that goes to a premium education course that I produced. In there, you'll learn all the different techniques I picked up over the years. You can actually walk away 2 complete trading strategies. I'm using that strategy right now. I'm short the French stock market. Earlier this week, I shorted gold with a very nice profit. I of course traded other stuff as well that didn't work out. So it's not just a license to print money, but overall a very, very good week, and overall very good year and month. So I'm super happy about that. And that strategy, again, is something that you can get for free. Just click on the link and you can read up more about how to obtain that. Thanks so much for watching, and I'll see you guys very soon. Bye.